Hello, welcome back. I'm Rachel. You're watching Kalkine TV live from Sydney. This is the Economic Corner show where we update you on all the biggest global economic announcements. First up on the Economic Corner is the monetary policy meeting of the Reserve Bank of Australia. On the international economic developments, the members of the RBA concluded that the global outlook had improved and that risks had become more balanced because of the progress in vaccines and the provision of additional fiscal support. Members noted that the upswing in commodity prices would boost inflation readings in the near term. Members also observed that the global fiscal policy response to the pandemic had been the largest since the Second World War, and that it would continue to evolve. In the most acute phase of the pandemic, governments had prioritised direct fiscal support for health systems and households and targeted measures aimed at reducing layoffs, such as wage subsidies for firms. A key development in the global economy in recent months has been the rebound in commodity and producer prices. Highly expansionary fiscal and monetary policy settings, a surge in global demand for goods and a strong recovery in industrial production in China and elsewhere had contributed to a sharp increase in the prices of commodities and other inputs. On domestic economic developments, members noted that the Australian economy was transitioning from recovery to expansion earlier and with more momentum than previously anticipated. Gross domestic product was expected to have returned to its pre-pandemic level in March quarter, and there were more people employed in March than before the onset of the pandemic. GDP growth of 4.75% was expected over 2021 and 3.5% over 2022. Conditions in the housing market had continued to strengthen, with house prices increasing further in April and in recent months. The upswing in house prices had become more broadly based across capital cities and regional areas. The outlook for dwelling investment also remains strong. Further out, the stronger forecast profile for growth in output and employment was expected gradually to reduce spare capacity in the labour market. In the baseline scenario, the unemployment rate was expected to continue to decline to around its pre-pandemic level of 5% by the end of 2021 and by 4.5% by mid-2023. Despite the strong recovery in economic activity, the recent Consumer Price Index confirms that inflation pressures remain subdued in most parts of the Australian economy. In discussing specific elements of the current monetary policy settings, members agreed that the July 2021 meeting, the board would consider whether to retain the April 2024 bond as the target bond for the 3-year yield target or to shift to the next maturity, which is the November 2024 bond. Members agreed that a change to the target of 10 basis points was not warranted. Also at the July meeting, the board would consider future bond purchases following the completion in September of the second $100 billion of purchases under the government bond purchase programme. The board remained willing to undertake further bond purchases if doing so would assist the progress towards the bank's goals of full employment and inflation. The RBA board reaffirmed the existing policy settings, namely a target for the cash rate of 0.1%, an interest rate of 0 on exchange settlement balances held by financial institutions at the bank, a target of around 0.1% for the yield on the 3-year Australian government bond, and the expanded term funding facility to support credit to businesses, that's particularly small and medium-sized businesses, with an interest rate on new drawings until the 30th of June 2021 of 0.1%. Also, the purchase of an additional $100 billion of government bonds at the same rate of $5 billion per week, following completion of the first bond purchase program of $100 billion. Next up, we're going to look at Japan's first quarter growth numbers. Japan's economic output fell 1.3% in the first quarter of 2021. That's a drop of 5.1% at an annualised rate because of a renewed COVID-19 state of emergency in the country. With Japan's big cities still under restrictions to control the spread of COVID-19, the economy would contract further in the second quarter, prompting economists to cut growth forecasts for the full year. Delving into the subcomponents of the release, there was nothing too exciting to note. Consumer spending held up a little better than had been expected, but business investment was worse. Moving on now, the US Department of the Treasury today released Treasury International Capital data for March 2021. The next release, which will report on data for April 2021, is scheduled for the 15th of June this year. The sum total in March of all net foreign acquisitions of long-term securities, short-term US securities, but business investment was worse. So the short-term US securities and banking flows was a TIC inflow of $146.4 billion. Of this, net foreign private inflows were $140 billion and net foreign official inflows were $6.5 billion. Foreign residents increased their holdings of long-term US securities in March. Net purchases were $208.1 billion. Moving on to some other news now, the Federal Reserve Board's report, Economic Well-Being of US Households in 2020, was released on Monday. It found a larger share of adults were worse off in 2020 than in previous years of the survey. This change occurred broadly across the population, but not all groups fared similarly. Despite the increase in the share of Americans doing worse off financially, most believed they're still doing at least okay financially overall. In the fourth quarter of 2020, nearly one-fourth of adults said that they were worse off financially compared to a year earlier, reflecting the economic fallout and distress resulting from the global COVID-19 pandemic. Results from this survey reflect financial conditions in late 2020 during the pandemic and indicate the changing nature of families' experiences. Financial repercussions related to COVID-19 continue to evolve, and the Federal Reserve Board will continue to monitor them. Meanwhile, Empire State Manufacturing Survey revealed that the business activity continued to grow in New York State. The headline General Business Conditions Index was little changed at 24.3. New orders and shipments continued to expand strongly, and unfilled orders increased. Delivery times lengthened significantly and inventories moved somewhat higher. Employment levels grew modestly and the average work week increased. Both inputs and selling prices rose at a record-setting pace. Looking ahead, firms remained optimistic that conditions would improve over the next 6 months and expecting significant increases in employment and prices. Now moving on to numbers released by the National Statistical Office for Canada, called Statistics Canada, for their international transactions in securities for March 2021. Canadian investment in foreign securities totaled $21.2 billion. That's Canadian dollars in March, mainly from purchases of US shares. Meanwhile, foreign investment in Canadian securities was $3.2 billion Canadian dollars, mostly in acquisitions of Canadian shares. As a consequence, international transactions in securities generated a net outflow of funds of 18 billion Canadian dollars from the Canadian economy in the month. The outflow of funds totaled $24.7 billion in the first quarter, the largest amount since the fourth quarter of 2007. Meanwhile, the Canada Mortgage and Housing Corporation released its report showing the trend in housing starts was 279,055 units in April 2021. That's up from 272,164 units in March 2021. This trend measure was a 6-month moving average of the monthly seasonal adjusted annual rates of housing starts. According to Bob Dugan, that's their chief economist, the national trend in housing starts remained elevated in April. That's despite a decline in the level of monthly SAAR starts from the record high set in March. In April, multi-family SAAR starts declined or moderated in most CMAs that had seen strong growth in this segment the previous month. Moving on now from that, the World Economic Forum has cancelled the in-person annual meeting once again, cancelling a gathering planned for August in Singapore. The forum's annual gathering of executives and policymakers usually takes place in Davos in Switzerland in January, but the World Economic Forum had already delayed it and moved it in the hope of keeping delegates safe. The cancellation comes a day after Singapore reimposed stringent distancing measures following a jump in COVID-19 cases. Moving on to some other news now, the World Health Organization has warned against a pandemic is over mindset, which has flagged of vaccine shortages. The WHO has warned that the COVID-19 pandemic is far from over, despite a decline in the global numbers in the past 2 weeks. The WHO Director General says that there's a huge disconnect growing where in some countries with the highest vaccination rates, there appears to be a mindset that the pandemic is over, while others are experiencing huge waves of infection. The pandemic is a long way from over. That's what he said. In the last week, fresh cases in the world have come down by 14%, the second consecutive week of decline in fresh infections. However, the global death toll has declined by only 4%, as deaths in India keep mounting. The Director General of the WHO also urged for immediate funding of the organisation, as it has been responding to high demand, as he declares it, from the surge in cases in India and other hotspots. The WHO has highlighted a massive vaccine shortage of 190 million doses, which can hamper the battle against the virus in various parts of the world. Already, India, the worst hit country right now, has seen its vaccination program partially suspended in certain provinces due to the paucity in supply. To add to their woes, there's been a noise of dissent in the US pharmaceutical companies over wavering of intellectual property rights on COVID-19 vaccines to meet global shortage. Earlier this month, the Biden administration in the US had said it supports waivers on IP rights for COVID-19. As global cases remained high despite 2 weeks of a dip, the World Economic Forum on Monday says that it has decided to cancel the summer version of its annual meeting that was scheduled to take place in Singapore. The summit was cancelled as the WEF found it impossible to realise a global meeting with business, government and civil society leaders from all over the world at the scale that was planned. Lastly, let's talk about US President Joe Biden. He says his administration will send at least 20 million doses of the US authorised COVID vaccines to other countries in the coming weeks, vowing to provide an arsenal of vaccines for the rest of the world. In a speech at the White House on Monday, the US president said the government would share at least 20 million doses of BioNTech and Pfizer, Moderna and Johnson & Johnson vaccines with the rest of the world by the end of June. That's on top of the 60 million doses of the AstraZeneca vaccine it's already committed to other countries. That's all from the Economic Corner now. Keep watching Kalkine TV for more live market updates and news on the economy. I'm Rachel, signing off for now.